Good evening and welcome to our annual member meeting for 2024. My name's Tim Lambert and I'm an Employer Relationship Manager based in Melbourne for CareSuper, and I'll be tonight's MC. Before we begin, I'd like to remind everyone that this meeting is being recorded and will be posted on our website within 30 days along with the meeting minutes. This will allow anyone who can't make it tonight to watch the recording. By joining this webinar, you're giving your consent for it to be recorded. In the spirit of reconciliation, CareSuper acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to elders past and present, and we extend that respect to all Aboriginal and Torres Strait Islander peoples here this evening. This year marks our first annual member meeting as a newly merged fund, the successful merger of CareSuper and Spirit Super on 1 November 2024, where we became a bigger and stronger fund. We are very proud to continue to be an award-winning profit-to-member industry fund and to be trusted as the custodian of your super. The annual member meeting is an opportunity for you and all members to hear about your fund and ask any questions, which we've already received many. An important thing to understand about tonight's proceedings is that even though we are now called CareSuper, we will be presenting the 2023-24 financial year investment results of Spirit Super as well as CareSuper. Our speakers will also talk about the merger and the future of the merged CareSuper. We know we have members from both funds here tonight, so we want to cover the last financial year and give you a good overview to ensure you feel confident about how your super is being managed in the new fund. Tonight, you'll hear from the most senior leaders of the fund, our Chair, Linda Scott, CEO, Jason Murray, and Chief Investment Officer, Suzanne Branton. Linda Scott was the Chair of CareSuper's board and continues on as Chair, responsible for the governance of the merged fund. Linda will provide an overview of the key strategic issues the fund has faced and a look to the future as our fund continues to evolve. Jason Murray, our Chief Executive Officer, who was the CEO for Spirit Super and now leads the CareSuper team in executing our strategy and the day-to-day leadership of the fund. Jason will update you about our merger and the future direction for our fund, as well as present on key fund statistics and initiatives over the past year. Our final presenter will be Suzanne Branton, the Chief Investment Officer for CareSuper, who is continuing in this role in the merged fund. Together with her team, Suzanne is responsible for the fund's investments. Tonight, Suzanne will discuss the investment performance of Spirit Super and CareSuper for the last financial year, discuss the market conditions and provide insights into what's on the investment horizon. Following these presentations, there will be a Q&A session where our speakers will answer your questions. We also have board members and senior staff online who can contribute. To take part in the Q&A, please type your question into the Q&A function on your screen. You can do this anytime, though all questions will be held until the official Q&A at the end of the presentations. Any questions that aren't answered tonight will be answered and posted on the website in the next 30 days. As we look back over the last financial year, it's been a very busy year for us leading up to our merger, as we continue to grow and strive to provide you with the best products and services in our now bigger fund. We hope that this member meeting helps keep you informed and provides you with confidence and reassurance that you are a member of a strong performing superannuation fund. So thank you for joining us tonight. I also need to let you know that the information provided in this presentation is of a general nature only. It does not take into account your financial needs or situation, and you should seek advice or read the product disclosure statement and target market determination document before making any investment decisions. We'll now move into the presentations. The first speaker I'd like to introduce you tonight is the Chair of the CareSuper Board, Linda Scott. Linda is an experienced Chair and Board Director, having served as the Chair of CareSuper since April 2022. Linda also serves as a director of the Australian Council of Superannuation Investors and as a committee of the Director Nomination Committee of IFM Investors. She is the chair of the Alcohol and Drug Foundation, Australia's leading organisation committed to preventing and minimising the harm caused by alcohol and other drugs, and is a director of Sydney's Powerhouse Museum. Having formerly served as the Deputy Lord Mayor of the City of Sydney, President of the Australian Local Government Association, on National Cabinet, and the first woman elected as President of Local Government New South Wales, Linda brings a deep passion for serving members and supporting their retirement confidence. Linda is joining the meeting from overseas, where she's currently representing CareSuper at the Superannuation Investment Summit in Washington, DC and New York City. This summit is a crucial event where leaders from Australian superannuation funds, including CareSuper, are working to secure the best investment opportunities for our members. Linda's participation at this summit is driven by our commitment to growing your retirement savings in response to the Trump administration's executive order welcoming foreign investment and at the invitation from the US ambassador to attend. By engaging with key US policymakers and investors, the International Monetary Fund, global bank CEOs and others, Linda is seeking to source the best deal for CareSuper members, as offshore investment as part of the investment mix helps provide the strong, sustainable investment returns we achieve. Her efforts at the summit are focused on identifying top global assets and building relationships that will benefit all CareSuper members. This is a testament to our dedication to protecting and growing your super so you can enjoy a secure and prosperous retirement. Please welcome Linda.
Good evening and welcome to our annual members meeting. As the chair of CareSuper before our recent merger and now the chair of the newly merged fund, I'm so honoured to present this update to you tonight. First, I'd like to acknowledge the traditional owners on the land on which we meet today. I would also like to pay my respects to elders past and present. It's so wonderful to see so many of our members online. As an award-winning profit-to-member industry superannuation fund, everything we do is for you. So welcome and thank you for being here. I'd also like to welcome our board members, employer and union representatives, and of course our wonderful staff. Your hard work and support have been crucial in the continual improvement of our fund. As Tim mentioned, tonight's meeting is a bit different in that we will be looking at the last financial year for Spirit Super, but we will also speak about the future for CareSuper. At CareSuper, our members are at the heart of everything we do. Your stories inspire us and remind us why our work is so important. Tonight, I'd like to begin by sharing a story that highlights the impact we strive to make in our lives. One of our long-standing members living in Tasmania has served as a union official for 38 years, having fought to build the foundations of Australia's superannuation system. He's now retired, having lived here and overseas, and enjoyed a successful and fulfilling career serving those members of his union to earn fair pay and enjoy a safe working environment. His commitment, alongside so many others, to build Australia's compulsory superannuation system has seen rewards for us all. I'm pleased to report he's now loving a retired life, fulfilled with gardening, volunteering, and of course, keeping a close eye on his superannuation. I'd like to particularly acknowledge all the former directors of both Spirit Super and CareSuper. Firstly, I'd like to thank Maria Wilton for her incredible work as the chair of Spirit Super and for joining us on this exciting new chapter as a director at CareSuper. Maria served as the chair of Spirit Super since December 2022. I'd also like to acknowledge Spirit Super directors from last financial year who haven't remained board members, but have contributed significantly to all of our members during their respective periods of service. Thank you to David Smith, who concluded a 12-year term in early 2024 and has been instrumental in improving the retirement outcomes for motor trades employees and auto workers in particular. Thank you to the incredible Anne O'Donnell, who served as a director from March 2017, Rhonda O'Donnell, who served as a member representative director since May 2015, and Susan Parr, who served as an employer representative director since 2021. All of the dedication, contributions and commitment from these people has been invaluable. I'd also like to thank the outgoing CareSuper directors, including my predecessor, the former chair of CareSuper, Terry Weatherall AM, who served as chair. I'd also like to thank CareSuper member directors, Rob Potter and Vanessa Seagrove, who served on the board from 2019 and 2021 respectively, as well as Merrin Kelsall and Kathy Sampson, who both served as our employer directors. Their dedication and contributions were also just so important for our members. We say farewell to our previous CareSuper CEO, Michael Dundon, who went absolutely above and beyond to support our members, and for that we thank him. Michael passes on the CEO baton to Jason Murray, who will be so familiar to many of our former Spirit Super members, having served as CEO since 2022. Jason brings with him 25 years of financial services experience spanning banking, insurance and superannuation. With his passion for innovation and developing strategies that deliver great outcomes for our members, we know he's going to do such good for CareSuper's members into the future. Tonight, you'll hear from Suzanne Branton, who's CareSuper's Chief Investment Officer. Suzanne has over 30 years' experience and has been leading the investments team at CareSuper for more than a decade. She has a legacy of delivering strong returns for our members with a smoother ride to help you build your retirement. This past year has been marked by significant economic challenges for many Australians, including many of you. Persistent inflation and high interest rates have put pressure on household budgets, making it difficult for many to manage our day-to-day expenses. Additionally, the cost of living crisis has been a concern, affecting not just the ability to save, but also manage our overall financial well-being. In response to these challenges, we have taken proactive steps to support you. We have focused on providing robust financial advice and resources to help you navigate through these uncertain times. We've ensured that our investment strategies are resilient, aiming to deliver strong returns even in volatile markets. This approach has helped you maintain and grow your retirement savings despite the economic headwinds. Moreover, we have advocated for policies that protect and enhance your superannuation. The passing of the Superannuation Objective Bill is a positive step towards ensuring that your retirement savings are secure and that you can look forward to a dignified retirement. Enhancements and how we can help all of you in our newly merged fund are so important. We continue to work tirelessly to represent your interests and to provide the support you need to achieve your financial goals. We are dedicated to helping you build confidence for your retirement planning. We can help you with financial advice, which is provided at no additional cost and designed to guide you through every step of your superannuation journey. We're here to help you make informed decisions that align with your personal financial goals. As part of your membership, you also have access to an award-winning health and wellbeing program that offers a range of professional health and medical services from the comfort of your own home. This includes mental health support, expert medical opinions, nutritional support, and fitness and recovery support. All of these services are available to you and your family at no extra cost, reinforcing our commitment to your overall well-being throughout life. By providing these comprehensive resources, we aim to support you not only in building your retirement nest egg, but also in maintaining your health and well-being so you can enjoy a confident and secure future. These are just some of the services you can access as a CareSuper member. I encourage you to take advantage of them. Our services and strong investment returns are the driving force behind the many awards our fund received over the previous financial year. We're so proud to serve you. Thank you to all of you, the members of our fund. We are still the fund you know and trust. In closing, I'd like to again thank all of you for your continued support and loyalty as we merged our two great funds to become CareSuper. Now, as a bigger, stronger profit-to-member fund, we'll work even harder to build your retirement confidence through exceptional care and connection. With members all over the country, we truly are a national fund, here to help build confident retirements for all of you. We retain very much connected to our heritage too. In every corner of the nation, we will continue working to strengthen and support local workers and businesses, as well as our nominating bodies, Business New South Wales, the Victorian Chamber of Commerce and Industry, and the Motor Trades Association of Australia, Unions Tasmania, the Australian Manufacturing Workers Union, Unions New South Wales, and of course the Australian Services Union. We always aim to strike the right balance between being big enough to make a significant impact and small enough to provide you personalised care, ensuring you always come first. We so look forward to continuing to provide you with superannuation, retirement and advice options when you need them to help you feel confident on your journey to and through retirement. Thank you.
Thanks, Linda. Up next is our Chief Executive Officer, Jason Murray. As the CEO of CareSuper prior to the merge, Jason is well qualified to be leading CareSuper as CEO. Jason has over 25 years of financial services experience, having held leadership roles in banking, insurance and superannuation in Australia and the UK. Please welcome Jason.
Thank you, Tim, and thank you to all our members who've joined us tonight. I'm Jason Murray, the new CEO of CareSuper and previously the CEO of CareSuper. It's great to see so many members online tonight as we share an update on how your super has performed over the past financial year. As Tim mentioned earlier, tonight's meeting is focused on CareSuper. However, I'll also provide an update on the future of your super and your fund. Over the past few years, the superannuation industry has been going through significant consolidation, resulting in fewer, larger funds. This has been driven by the changing expectations on the industry and the evolving needs of our members, particularly as more and more of you approach and enter retirement. Meeting those changing member needs and growing expectations requires a significant and sustained investment in the products, services and experiences that funds offer, and the capabilities and technologies that deliver them. Simply put, it's harder for smaller funds to sustain the investment required. Last financial year was therefore a hugely important year for CareSuper and CareSuper as we prepared for our transformational merger, while simultaneously ensuring that both funds kept performing for you. Throughout the year, our teams worked tirelessly to bring together the best of both funds so that we could deliver a bigger and stronger profit per member fund for you, our members. As separate funds, CareSuper and CareSuper were both delivering strong long-term returns, winning awards and growing, with CareSuper's membership growing 6% last financial year. By merging our strengths together, like we did in November last year, we were able to accelerate both funds' development, combining products and services, as well as leveraging the scale benefits of looking after $56 billion in funds under management and more than 550,000 members across Australia. Joining forces now makes us big enough to make a difference to your super, while remaining small enough to provide you with personalised care. There are a lot of complex moving parts when it comes to safely merging the systems, data and investments of two super funds, and for a few weeks, as per our merger plan, not all of our services were available. We also acknowledge that through this transition, our phones were very busy and there were longer wait times. We apologise for any inconvenience that you may have experienced through this planned and very important limited services period, and we appreciate your patience while we securely merged your funds together. Genuine care is something that was fundamental to the culture of both Spirit Super and CareSuper, and this alignment of purpose and passion for our members is what made our merger so appealing and ultimately successful. As CareSuper, we're proud to continue and extend our philosophy of care into everything that we do. As members, this means that you are the beneficiaries as we seek to provide excellent retirement products and tools, the best financial advice, extra care and support for our most vulnerable members, wellbeing services that go well beyond the financial, and a digital platform that empowers you to manage your super anytime, anywhere. Our members are our number one priority. So last financial year, we were delighted that once again Spirit Super was recognised as having the best customer experience in superannuation by Customer Service Benchmarking Australia. This is a back-to-back award win for our member support team, and we're thrilled that their hard work is setting the standard for the industry. Last financial year, our contact centre helped over 125,000 members with their super over the phone and over 7,000 members through our live chat service. Our advisor team met with over 7,000 members and responded to 1,200 pieces of advice across topics like boosting your super and planning for retirement. This service is provided as part of your membership, so you don't have to pay anything extra. Our award-winning member support heroes are still operating out of our Hobart office, and they are now joined by a new team in Melbourne to make sure that all of our members right across the country get the level of care and support that they deserve. It's just another way that we're keeping the best of both funds and ensuring the personal touch that we've always taken pride in carries on. Our advice services have been extended since the merger, and we now provide personal, comprehensive advice. You can speak with one of our advisors over the phone or in person, and I would encourage you to take advantage of the various advice services and give us a call if you need help with your super or retirement planning needs. Over the financial year, we also saw many members engage with us digitally, with over 1.5 million visits to our website and 280,000 account logins. We also saw a high take-up of our recently upgraded mobile app, which allows you to manage your super anytime, anywhere. The merger has seen new education topics and tools added, and members can now get a view on how their super is tracking with our new retirement projection tool, which gives you an estimate on how much money you might have when you retire. Along with members, we continually strive to support and care for our employers. They have chosen to partner with us to help their staff achieve retirement confidence, and we take this responsibility very seriously. Through a range of customised services and resources, we provide our employers with a personal approach. Our on-site visits, education seminars and toolbox talks offer hands-on support for members so that they can get the most from their super and understand the nitty-gritty of retirement planning. The superannuation landscape is forever evolving, so supporting our employers through change is as important to our business as it is to theirs. Both CareSuper and Spirit Super had similar strong annual returns in the last financial year. Our philosophy of care also carries through to how we invest your super. We actively manage your investments, take advantage when markets rise, but we also protect your super during volatile times. The result is a smoother ride to your retirement. Our Chief Investment Officer, Suzanne Branton, will be speaking to you next about our investment performance. Finally, as the superannuation landscape evolves, we want to ensure that you are aware of the important changes that can positively impact your retirement savings. The federal government announced that from 2025, super will be paid on the Commonwealth Paid Parental Leave Scheme. This is a measure that we are very happy to support. We, along with other industry super funds, have long advocated for the change, and we're delighted that our members will be among those who benefit from it. Super does and will play an important role in closing the gender pay gap. That's why we pay our employees super on paid and unpaid parental leave, and we offer fee-free insurance to our insured members while they are on parental leave. Other changes saw contribution caps increase, which are the limits on how much you can contribute to your super each year, and gives Australians even more tax incentives to build their super balance for a confident retirement. The super guarantee saw another rolling increase, with the SG rate moving from 11 to 11.5%, and it's on track to increase to 12% in July this year. In conclusion, I want to thank our board, executive team, strategic partners, employers, and service providers for their continued dedication, commitment, and passion throughout the year. I'd especially like to acknowledge the incredible and dedicated team at CareSuper and former Spirit Super for their exceptional commitment to making the merger a success for our members. But most importantly, thanks to you, our members and employers, for joining us on this journey as we grow and evolve. And as always, everything we do is to benefit you and your super, so that you can feel confident on your journey to and through retirement. We genuinely believe that together we're super. Thank you.
Thanks, Jason. I'd now like to introduce our final speaker, Suzanne Branton, CareSuper's Chief Investment Officer. Suzanne has served as the Chief Investment Officer for CareSuper for the past 10 years and is continuing this role in the merged fund. Suzanne is responsible for the management of CareSuper's investment portfolio. She leads a team of dedicated investment professionals who work hard with great expertise to deliver strong outcomes for our members. Suzanne has extensive expert knowledge of portfolio management across all asset classes and is a proven leader within superannuation with over 30 years experience in financial markets. Please welcome Suzanne.
Good evening, everyone. I'm very happy to be here tonight to provide you with an investment update on our fund. As Jason and Linda have already spoken to you about, Spirit Super and CareSuper merged to create a new fund on the 1st of November 2024. And as part of this, we brought our two investment portfolios together. One of the main aims of this member meeting is to review the financial year to 30 June 2024. And as we merged after the financial year end, and we have members from both Spirit Super and Heritage CareSuper here, I'll talk about the performance of both previously separate funds and the drivers of those results. I'll then provide an update on current investment market conditions and talk about some of the things we think will be important for all members of our merged fund looking forward. Let's start with our performance last financial year. Tonight we'll primarily look at the returns for members who are in the accumulation part of our fund. That full returns of all of our options can be found on the website. First, turning to Spirit Super. The financial year to 30 June 2024 was a positive one for Spirit Super members. The balanced MySuper option achieved a return of 8.8% for the year. The balanced pension option was also strong, returning 9.5%. And when we look at the underlying drivers of those results during that financial year, it's apparent that the performance of the main asset classes was quite varied. It was global shares that really boosted results, with an increase of around 20%. And what's interesting about this exceptional result is that those gains were narrowly focused, with more than half of that return coming from a small handful of US companies in technology and artificial intelligence. Now, while global shares were the standout performer, we also saw good results from Australian shares as well as from our infrastructure and private equity investments. Defensive asset classes such as fixed interest and cash, they produced more modest returns in the sort of 3 to 4.5% range. Let's look at the 8.8% return for the balanced option, shown in green, and compare this to the returns for Spirit Super's other pre-mixed or diversified investment options. And you'll see that options with more shares had better results. The most defensive option, the conservative option, is on the left, and you can see that its financial year return is less than the balanced option. Of these options, the conservative option has the lowest allocation to shares. And as you would expect, the growth option shown on the right, which has more invested in growth assets like shares, has the highest return for the financial year. Let's now consider the results for the CareSuper suite of pre-mixed investment options for the financial year. Now, while there are differences between the investments of the CareSuper and the Spirit Super options, the performance of the main asset classes meant that the returns of the options follow a similar pattern. Overall, returns were strong, and CareSuper's balanced option, shown in green, returned 8.5% for the financial year. The balanced pension option was also strong, returning 8.7%. Again, the growth option, which has the highest proportion of its investments in the more growth-oriented or risky assets like shares, was the highest performer during the financial year. Members can see the returns of all of CareSuper's options and products on our website. Pleasingly, it was a great year for both Spirit and CareSuper members across these options, and results were higher than the average we've seen in the past. Importantly, returns comfortably exceeded inflation of 3.8%. What is exciting for members and will support the ongoing strength of our combined suite of options is that we have now brought the two investment portfolios together. This occurred as part of the merger and created a fund with over $56 billion in funds under management. As part of the merger, we will be continuing to build on CareSuper's distinctive investment strategy, which is recognised in the industry for consistently delivering great outcomes for members. It's an active investment strategy that's specifically designed to produce strong, long-term outcomes through a variety of market conditions. That's what we call a smooth ride, and it's something we are very passionate about. It means providing members with strong, long-term returns, but with less risk. When we reflect on the range of issues facing investment markets, we think this is more important than ever. For example, we are actively positioning our portfolios in response to the risks and opportunities arising from significant changes unfolding in the global economy. The policy changes flowing from the Trump administration are expected to have a material impact on the outlook for investments, and investor uncertainty has risen significantly. Interest rates and cost of living pressures remain key focus areas, and central banks around the world are expected to bring interest rates down, but at different speeds. As part of our active approach, we continue to assess these and other critical themes that influence the investments that we select and how we allocate between asset classes. While the outlook for the global economy and other key drivers of financial markets appear to be undergoing change, and investor uncertainty has risen as a result, you should feel confident that we invest in a way that navigates change, takes advantage of opportunities, and also protects your savings. CareSuper's past performance shows that we've been able to do this well. CareSuper's balanced option is among the top 10 performing funds in Australia over the past 10, 15 and 20 years, according to Super Ratings, and we're ranked number 1 in Super Ratings' risk-adjusted return survey over the past 10 years as well. In looking at the long-term performance for CareSuper, an important point to note is that as part of the merger, the fund's investment options were aligned with the former CareSuper investment options. The long-term performance before the 1st of November 2024 reflects performance of the former CareSuper investment options. The performance history of Spirit Super investment options is available on our website. So as I wrap up our investment update today, you should be confident that your retirement savings are in safe hands. If you have questions about your investment options, please don't hesitate to contact our team of expert superannuation advisors who are here to help you make the decisions that best suit your personal retirement goals. Thank you so much for joining me tonight, and I will hand back to Tim now, but I look forward to answering your questions shortly.
Thank you to all our speakers tonight, Linda, Jason and Suzanne. Well, ladies and gentlemen, that ends the formal part of tonight's member meeting. We trust it's been informative. We'll now move into the Q&A session. We've allocated the remainder of the meeting to answer as many of your questions as possible. Please be aware we have had quite a few though, and remember, if we don't get to your question tonight, rest assured that we will provide a response as part of the minutes from this meeting, which will be published on our website. We have received quite a few questions around investments from our members. We won't be able to answer them all tonight. However, all individual questions will be answered in the minutes on the website in the next 30 days. Suzanne, the first question is around the outlook for markets. We received a few questions asking about what might happen in the future. One question is from Oscar, which is, what are the greatest dangers to our investments and how are they being dealt with? Suzanne.
Thank you very much, Tim, and thank you, Oscar, for that question. We do always get lots of questions about the outlook, and that really is fantastic. So I'm going to talk a bit about that and also try and address that question about the dangers that might lie ahead. The first thing I think I should do is explain that we don't provide specific forecasts for returns for our options. What we are doing is constantly assessing market developments and the investment environment. And we're making decisions and positioning portfolios to achieve strong long-term results, looking at the fundamental drivers of each individual investment as well as asset classes. Now, for us at the moment, the outlook does appear quite mixed. There are elements of real strength in the investment landscape which are really positive. But there are certain things that suggest to us that volatility might continue for a while. There's a great deal of change in the world. And we're coming into an era where the starting point for shares is already quite high. Now, Oscar's question was about dealing with the dangers ahead, and we do that in a number of ways. The most important way is actually through the way that we invest. CareSuper has a very distinctive way of investing that's very active, and being active is the main way to deal with challenges that might lie in the landscape. Our history is a very strong and proud one of not only delivering strong returns, but also investing in a defensive way that protects members' retirement savings. So our members can really feel confident that the landscape will hold issues and changes that we are well equipped to deal with.
Thanks, Suzanne. Another member has asked about regional investment in Tasmania, Suzanne. James asked, as a proud Tasmanian, how do CareSuper propose to invest Tasmanians' money locally? This is an important factor in my view, with the lion's share of Tasmanians invested into your fund.
Oh, that's a fantastic question. Thank you, James. It's great to hear from our members in Tasmania. I really respect you thinking about the Tasmanians invested in the fund and the high proportion of those that are. The fund has really important investments in Tasmania, and we have no plans to change that. I think what's important to reflect on, though, is that, following mergers and what we've discussed tonight, we really are truly a national fund. And we're a much stronger fund that will be far better for members with a genuine national footprint, which is really fantastic. We have lots of investments in regions, though. You in your question might be thinking about the fund's investment in the Hobart Airport, but we're big investors in Brisbane Airport, the Port of Geelong, investments in South Australia, really truly a national investment footprint. And we're really proud of those investments that we make across Australia, not just in capital cities but in regions, and how they support jobs and communities in those areas. It's really, really important for us. And not to mention, we have a very large local fund office in Tasmania that does just that. So I would perhaps just finish in answering that question, Tim, by reflecting on the fact that all of our investments, no matter where they are, they're made on the basis of investment merit. what they will deliver members in terms of risk and return. And we must do that because everything we do is acting in the best financial interest of members.
Thanks, Suzanne. Jason, the first question for you is from Andrew. He's asked, what improvements have been made for transition to retirement arrangements to support members approaching retirement in the next 5 years? Jason.
Thank you, Darren. That's a great question. Obviously, lots of members are in that same situation as you are and thinking about retirement. So it's important to know we regularly consider our product set in totality and make sure that they are meeting your needs. And we recognise that our members' needs do change, and we obviously have to change our products to suit that and our services as well. Specifically to your question, at the time of merger, which obviously was 3 months ago, we made some decisions about which products to bring forward that were best for our members. And with the transition to retirement product, it was one of those ones that actually both funds had a good transition to retirement product, therefore there wasn't a need to make a change to it. What I would say though, to add to that, because the product itself, whilst it's not changing, there has been lots of changes around it. We have added significant additional information and resource. We've got a new retirement section on our website, for example, with tools, calculators, guides, and lots of information, and that's regularly being updated and extended. So if you are feeling like you are approaching retirement and want some information about it, that's a good place to start. Equally, as a consequence of our merging, we brought together the best of both parts of our previous funds' advice strategies and advice offerings. So now we have a more comprehensive offering for our members, which is obviously very important if you are approaching retirement or in retirement and considering your needs. So I would just encourage you. We have a fantastic team to help our members through these challenges and changes of retirement. They would love to have a conversation with you, so I'd encourage you to make a call to us and we can help you.
Thanks, Jason. The next question for you is from Hannah. She's asked, why did CareSuper merge with another super fund? Will this keep costs down or make fees for CareSuper members more? What future goals, changes, upgrades does CareSuper have for its members to ensure their loyalty? Jason.
Thank you very much, Hannah. A big question and a really important one, and I will just take a little bit of time to break that up a little bit and try and give it justice in my answer. Firstly, the primary question, the why question, I just want to assure members that yes, on the 1st of November, both funds merged, and a primary test that must be passed for any super fund that is in a merger situation is, of course, is it in the members' best financial interest? So it's important for all members to understand that was a test that had to be done by the two separate trustees to come to the conclusion that this was an appropriate thing for all members, and it obviously passed that test. To your specific question of why, you would have heard some of this in my earlier speech, but fundamentally, a first piece is, of course, the superannuation landscape itself. The world is changing out there. Superannuation is changing and evolving as more and more members have been able to take advantage of it over time. But equally, the needs of members are changing as people have more in retirement than they used to have in superannuation, which means, of course, they need different products and services and solutions in those retirement years. And fundamentally, of course, the regulatory environment is changing, the government expectation is changing, and this all adds to the complexity of the superannuation industry, which leads to us having to respond to that, all funds obviously having to respond to those things to make sure that we are remaining relevant to our members, and obviously secure and operating within the regulatory settings, etc. And that all adds cost. Fundamentally, and that means, of course, then we have to spread that cost across our member base. So one of the big whys is the changing world out there and the need to have sufficient scale to spread our cost to keep pressure on that in the right direction. So, of course, we want to make sure that we're adding value to our members and holding that our costs are appropriate for what the services that they are demanding from us are offered at. So that's the first question. I think the second part of that was then, of course, actually a bit more about the cost piece. Will it keep costs down? I will summarise that by saying that is absolutely the intention.
and I hopefully can follow that up with the point that of evidence that it actually has already occurred. So if you were a CareSuper member leading into this merger, if you came with the previous CareSuper fund, that of course all members within CareSuper received an administration fee discount as part of the merger. So that is proof of what we're talking about the pressure on costs. Now, I just want to be very transparent that yes, some fees for some members or some costs for some members went up. So we had a fee cap increase as a specific example of that. So some members it did go up, but it is worth articulating that that would have gone up regardless of the merger. So again, and arguably other fees would have had to have changed for Spirit Super had the merger not occurred. So again, hopefully that shows you that this merger does have the right trajectory in terms of the pressure on costs going down, because we get to spread it over a wider audience, a wider membership base, which is really, really important to our model. The last bit about the future, that's the bit I love thinking about, because it's a very exciting future for CareSuper and for its members. We have, but I would say you don't have to wait for the future to have got benefits from this merger. So I think it's important to just cover off. We recognise every day in CareSuper that we're here for two big reasons, and one is to protect and grow your superannuation balance, your retirement savings, and the second piece is, of course, to help you on your journey to and through your retirement, and that is incredibly important for us to help you. Both those things incredibly important. They are what we are fixated on as a super fund. So the broad areas that we are enhancing as part of our go-forward organisation are, of course, related to those things. We are making sure that our fund is secure. We are spending time and energy and money to ensure that your super is secure with us. We are obviously, Suzanne was talking about how we grow and how we invest your money. That is another area where we're obviously spending a lot of time, and the benefits of the merger are coming to the surface already in that space, because now we have $56 billion worth of retirement savings, your retirement savings, that we are custodians of on your behalf, that we are investing for your best retirement. So there's a couple of examples. I also would flag that, of course, we are spending a lot of time working on the service piece. Now, we have an amazing foundation of our service. We have an award-winning service that was the Spirit Super in-sourced administration model, and that is something that the new fund has brought to you already. So these are examples of the benefits that members are getting, so you don't have to wait to see the benefits. And of course, we talked about some of the products coming together and how they've been extended and expanded for for all of our members, so for all of you. And of course, our advice offering, same thing. It has been expanded. So again, the landing message here is you don't have to wait for the future to see the benefits of this merger. It happened from day one and will continue to happen, and it's a very, very exciting future for this fund and for its members.
Jason, Lara has asked a question around cyber security. She's asked, what are prevention strategies on battling cybercrime and threats, aside from providing verification code for all your members?
A great question, and a really, really important question, and it's a question for all of our members, so I think this is a really good one to discuss tonight. Firstly, as CEO of CareSuper, I can assure you that this is an absolute top priority. It's something that I think about a lot. And to emphasise that, obviously, the security of your information, not just your money, but the information and your superannuation, is incredibly important to this fund. Having said that, in the world that we operate today, and I think we all read the newspapers, we all understand what's going on, the cyber threats are escalating and evolving very, very rapidly. And naturally that means that we as a super fund have to also evolve rapidly to match and meet those challenges for our fund. And that's, of course, exactly what we're doing. So alongside measures that you mention yourself that you might experience, obvious things you might experience as a member, such as verification codes and multi-factor authentication, there is a whole plethora of strategies and tools and activities that we undertake to keep your superannuation safe. For obvious reasons, it's best I don't actually talk about all of those. So I will resist that because I want to obviously also protect your money from those very bad actors. What I will say, though, I will give you some of the detail. I will give you enough detail to hopefully give you the confidence that we are acting on your behalf appropriately. So we do have a team of people. We have a financial crime team. We have a cyber security team inside our building. They are our own people working on this and keeping your money safe 24/7. We have a whole set of comprehensive strategies to also tackle that threat. And we supplement that team with external cybersecurity experts. That helps us with the complexity of the challenges to stay relevant to the challenges, but also supplement our capacity at times if we need it, and to also respond to challenges because these challenges exist. So we are always active in that space. We are always working with our teams, but also external experts on it. We are always scanning for vulnerabilities within our systems. This is obviously an important part of this challenge, that we must be one step ahead all the time. And we do publish to our members information and notifications. So we're trying to help our members understand what the challenges might be and how they can help prevent them, but equally guidance and support about these sorts of threats to help you feel more confident about it. Equally and importantly, we engage with the government intelligence community, the government intelligence agencies, and I can say, without saying who, we did have one of those at our board meeting last week. It's something that we are always engaging with because, of course, these threats often come from offshore. They are, they can be exposed to offshore threats, which are really important that we are defending your savings against. On top of that, and perhaps trying to close this down quickly to allow more questions, but we have we are also have a whole bunch of standards and obligations that we try to meet, and we are always, I shouldn't say try to meet, we definitely meet, and we're always looking to be best in practice. So we have adopted voluntary codes and voluntary standards as well. A recent one that we adopted was the fraud and scam mitigation measures standard. It's a very long name, hard to remember. That was something that was put forward by the Financial Services Council late last year, and we've obviously already signed up to that. Importantly, though, we cannot do this alone. And this is a piece that I call on our members for help here, because this is something that the fund and the member has to work together to help best protect your retirement savings. We need your vigilance on this too. So a couple of points on that. To help reduce that risk, we'd obviously always encourage that you adopt the strongest possible unique passwords that you possibly can. And this will help you, and always be alert, obviously, to phishing attacks or phishing attempts and social engineering. And they are getting very sophisticated and more and more challenging to obviously pick through and find the ones that are actually bad. I would it's important for our members to just be aware that we will never ask you for your member online credentials, your passwords, or any of your credentials. We'll never do that through a telephone call. We'll never do that through any email or any other mechanism. So if you receive one of those that is not from us, equally, if you ever are talking to somebody who may be positioning themselves to be us and you feel uncomfortable and uncertain about it, then I would encourage you to hang up or disconnect and give us a call from our website. Go to the number on our website and give us a call from there, and we can give you certainty or comfort about whether it really was us or whether it was somebody else. And finally, I just would love to encourage members, if they ever feel that their personal information has been compromised in any way, your identity information, please contact us as soon as possible. The sooner you can contact us, the sooner we can do something to protect your retirement savings. And it's a really, really important call out that if you ever feel that you have lost some of your personal identity in any instance, please remember to reach out to us and let us know so we can protect your retirement savings.
Thanks, Jason. We now have a question that we're going to cross to Linda with. It's a question from Heather. There has been recent criticism of the board composition of industry superannuation companies. What is CareSuper doing to improve the composition of the board and drawing experts with a wide range of expertise, particularly AI. Let's hope we can cross to Linda.
Thanks so much, Heather, and we really appreciate you asking that really important question about the board structure and governance at CareSuper. We know and place a really strong priority on acting in our members' best financial interests, and we have built a board model that ensures that we can deliver that for you and for all our members. We have a great board. It's very diverse and it has a great and diverse skill set to effectively oversee all our obligations to you. Our board includes member representatives and employer representatives and an independent, as I mentioned, and it is a balanced perspective, therefore, that gives us a lot of different views around the table to best govern. The practice is aligned with best practice right across the world, particularly for global pension and superannuation funds. But I did want to share with you some recent research from the Super Members Council. They looked at the impact of board structures on long-term returns, and they found really important information. Firstly, their research found that profit to member funds that have equal representation of employers and members on boards have consistently outperformed other kinds of board structures. So, for example, the research found that over the past 20 years, profit to member superannuation funds outperformed retail funds by 1.6% on average. That performance edge means $190,000 more at retirement for the average Australian. This performance is attributed to the strategic asset allocation and the careful fund manager selection, which is driven by board structures. And we know, for example, that in Australia, the top 10 performing superannuation funds over the decade to the 30th of June 2024, in which CareSuper is very proud to be included, were all profit to member fund boards. So it's really critical to understand that we've tried to rely on a very strong evidence base when considering the structure of our board. And then how does our board work? We have a composition, nominations, and appointment and removal process to ensure that we're guided by laws, regulations, our constitution, and all our own policies. Directors continue to have to meet fitness and proprietary tests, and we look at our skills matrix regularly to ensure that our directors are investing in professional development. We continue to learn about a range of things, including, as you mentioned, AI. We have a new technology committee, and that's worked very hard on a range of factors, including AI and technology innovation. So I'm really pleased you asked that question. It's a real focus of our board, both in terms of the structure and also what we do as part of our every meeting planning to ensure that we're having the right people, the right skills around the table in the right structure to deliver for each and every one of our members in their best financial interests.
Thanks, Linda. And one final question for you and for the evening from Anne. It's, will superannuation still be relevant in the next 5, 10, 15 years, given the cost of living and rising costs everywhere?
And look, thank you again. Another great question. I did, of course, as was mentioned, want to highlight that I'm here tonight actually in New York as part of the Australian Superannuation Summit. And as part of that, there's been a lot of global reflections on Australia's superannuation system. So I thought it might be interesting to share some of the learnings I've had whilst here. Firstly, I wanted to let you know that there's a new report out that shows that the Australian superannuation system is currently the 4th largest in the world after the United States and Canada and the UK. But it's projected, given its size and growth trajectory, to become the 2nd largest system in the world after the US
by 2031. It's pretty remarkable to think that globally, a relatively smaller country like Australia is punching so much above our weight when it comes to having such a successful system. We know that that helps all Australians and all of you in particular, our members, but it also helps the whole of the national interest. The growth of the system means that the proportion of Australians receiving the full age pension is projected to halve from 44% today to 21% in 2062 to 2063, because so many people will be able to have the benefit of the wealth of their superannuation system. I was able to take the opportunity while I was here to meet with some of the new US administration and ask the Treasury Secretary, Scott Bessent, this week, his views on the Australian superannuation system. And I wanted to share his comments from this week with you. He said he was struck by how the superannuation system delivered certain growth of Australian retirement savings in a sustainable and regular way. He said, that's what I was struck by, the confidence you have in the growth. It's not what one might expect for Australia. Many other sovereign wealth funds, the volumes are dependent on a particular commodity price, whereas your regularity, sustainability and trajectory are really preferable because of the compulsory nature of the preservation of Australia's system. That's a really remarkable endorsement from the Treasury Secretary of the United States for our Australian system. I do want to acknowledge, though, the importance and challenges of rising costs of living, and so it's even more important to ensure the system supports you so you can have a confident retirement. So we're doing everything we can, as you've heard, as much in this meeting and as part of the information that we share with you as a member on a regular basis. But it's important to also remember that the super guarantee was introduced in Australia in 1992 to help financial security for Australians in all of our retirement years. Inflation and the cost of living has made it harder for many people to save and for some Australians to even afford necessities. But the super system is there to support Australians through that. And also, superannuation is invested, as you've heard tonight, with the aim of achieving returns that are higher than inflation. We have a range of investment options and some of them with higher target returns. So our CareSuper unique active investment philosophy aims to grow and protect your superannuation and deliver you stronger long-term returns for the future. And of course, finally, superannuation offers those all-important tax benefits, including lower tax rates on contributions and investment earnings. So when you are fully retired, payments out of superannuation are tax-free, and as are investment earnings on your balance. These advantages make it an incredibly efficient, effective way to save for retirement compared to other investment options. So, despite the economic headwinds, superannuation remains a key asset for ensuring all of our financial security in retirement, and it does so in a structured, disciplined way that is really recognised throughout the world now as an incredibly strong, significant system and growing incredibly strongly, the fastest growing superannuation sector in the world.
Thanks, Linda, and thank you all for the questions that have come through. We really have had a whole lot of questions there. Unfortunately, that's all the questions we have time for tonight, but if you have had a question that has been left unanswered, rest assured we will get back within the next 30 days and that will be produced in the minutes. Before we go, I'd like to warmly invite you to come along to one of our in-person roadshow events that's happening in Melbourne, Sydney and Hobart in a few months. At these events, we'll be holding a retirement planning session and you'll get the chance to meet and hear from Linda, Jason and Suzanne. Look out for an invite coming soon. Well, that concludes our annual member meeting for 2024. We thank you for joining us tonight from all across the country. We appreciate your time and know that it's precious. If you have any further questions or would like to talk with one of our super advisors, please call us on 1800 005 166. This service comes at no additional cost to all CareSuper members. It's all included in your member fees. Thank you, and we look forward to hearing from you soon.